this video is about the common type of the business loan in the USA. Below you will find 7 type of the business loans you might want to consider if you need funding for your companies. Using a business loan broker can be a handy ways to find the best option. SBA loans. An SBA loan is a type of the financing that's backing by the US Small Business Administration SBA, which grants a portion for the money business borrows through these loans programs. Therefore, the risk is lower for the lender, and the lenders may be willing to extend money to the business that is might not otherwise approval for financing. The international rates on SBA loans can be competitive for the well qualified borrowers. What's more, SBA loans typically range from $30,000 to $5 million and come with extended payment terms up to 25 years. However, SBA loans also features nationally notoriously tedious qualifications requirements. You should be prepared to jump through a lot of hoops and wait up to few months to find out if you qualify. Having a personal credit score of at least 680 is recommended for this type of the loans. Term loans. Business term loans are another common type of the business financing that's repaid over the set period of the time. You may be able to get a business term loan from a traditional bank to the online lender. Newer business typically have a better chance to approval through online lender because they typically offer more flexible qualification requirements. These loans typically have terms ranging up to 10 years, offer loan amount up to around $5 lakh, and annual percentage rate that are started around 9%. Your business history, annual revenue, and the credit worthiness, including your personal credit, typically determine which loans terms you will have access to. Working capital loans. A working capital loan is a short-term financing, typically a term loans line of the credit or invoices forecasting that can help businesses that need a cash infusions to cover day-to-day operating expenses such as the payroll. Seasonal business in particular might benefit from the working capital loans during slow seasons when managing cash flow in the challenge. Working capital loans terms will vary depending on the specific types of the financing you apply for the risk you pose as a borrowers. In general, through working capital loans can range from $200 to $5 million as a result of the term loans that features easier to satisfy qualifications criteria tend to come with higher interest rates that fees to offer the lender's risk. Business line credit. A business lines of credit offers a flexible way to borrow money when you don't know the exact amount of the funding you need upfront. This is because however can access a credit line between $200 to $250,000 on a needed basis, similar to the credit cards. What's more, you can reuse your credit limits as you repay in throughout the draw periods, and you will only owe interest on the amounts you will borrow, not the entire approved limit. Unlike business credit cards, a business line of the credit draw periods eventually expires, typically within 12 to 24 months. When the draw period ends, the payment period begins, and you will have to repay any unpaid balance plus interest. The repayment periods can change anywhere from 6 months to 5 months. During this time, you will no longer have access to your credit limits for borrowing purposes. Merchant cash advance. A merchant cash advance can be the easy way to success short-term financing when your business needs money fast. Business owners give the lender after the merchant services company a portion of the failure sales of the receipt in return of the lump sum of the cash. This amount plus fees are repaid from the business individual sales of through automatic cleaning house payments on the daily or the weekly basis.